Hi, I'm Beat Nussbaum from macrobeat.co.uk. Not really a lot happened since we were online last week. Equities remained in tight ranges, continued to push for the sort of highs. The FX has probably seen a bit more interest on the dollar side. The dollar starts to follow through a bit on the top side, stuff we've been discussing in the last few weeks. And I guess the sort of dollar bears from that sort of gone into 2021 expecting the dollar to collapse or at least move down may have to start to resync a little bit, given what I will show you later on the charts. We have obviously had quarter end yesterday that sort of winded down business a little bit. We have the big Easter break in Europe, with most of the markets off tomorrow and on Monday. So trading is pretty much grinding to a halt. Of course, we have non-farm payrolls still coming out without the European market. So that's going to be a little bit interesting to see how this pans out. But I think the market is really gearing up again next week. So I wouldn't really expect too much in the next few days. On the data front, we continue to see strong US data, sort of okay-ish European data. And we had a bit of a dip in the Caixin manufacturing index in China. This afternoon, obviously, we still have US PMI, US ISM, which is going to be interesting to watch, but I don't really expect those pictures to change and US data to remain solid. I have a few of the FX charts today for you. First up would be euro dollar. As we sort of pointed out last week, the momentum indicators start to push higher again, which means more downside in the euro. We now have finally reached 116.95, which was the sort of target after the 119.45 break. So possibly we have a little bit of a consolidation around here, but I wouldn't be surprised that, in Q2, so start of next week, we start to shift gear again and take euro down to the 115 area. On the next chart, this is dollar yen. That's probably the sort of biggest standout in that sense. This is a monthly chart. I put the cloud in there just sort of for illustrative purpose. We had a monthly close above the 6-year trend line that was at 109.05. That line has moved down to 108.80. So while above 108.80, dollar yen continues to push higher. 112 area will be the next target. Again, might be a little bit sticky in the next few weeks, given a big move in the last few months, but the direction is pretty clear, more upside for dollar yen. The next chart is the Aussie. The Aussie has been very sticky all along in this entire dollar trend, obviously with high Aussie yields, with strong commodities, with still a strong China. So obviously Aussie had a bit other areas to look at, not just the dollar or US yields, but it starts to sort of roll over. We had the first attempt below 75.65 last night, hasn't yet stayed below. If we can stay below that 75.65, that would be the real signal for Aussie to start rolling over as well, and probably has the next sort of 2% on the downside. Generally, most charts really support the higher dollar still. On the next slide, this is Aussie CAD. The reason I show this is a lot of the move down in the Aussie, or almost a surprise move lower in the Aussie overnight, has really been triggered by a bigger break in Aussie CAD. This is a very big position in the market after the sort of March 2020 lows. This is a sort of RV type of trade that a lot of the real money probably is looking at. And it starts to really look as if Canada starts to move to outperform from underperforming now for more than a year. Daily close below 95.45 will continue to see more pressure on the downside. This could add pressure on the Aussie. The next slide, DXY, really same old, finally broke the 200-day moving average, broke 92.50. Next pivot, 93, on its way to 94.20 really. The last slide is gold. Gold had a really big test of this 1680 area again yesterday. Big trend line, 2-year trend line, big Fibonacci support, and a real strong reaction finally. So this was a sort of make or break area there at the 1680 level in gold. We rejected the downside, very strong rally. So that should really put the downside worries a little bit to bed for now. I don't expect gold just to start to rally and go back up as if nothing happened, but I would say the downside is definitely safer at this point in time. This is it from me for this week. Thank you very much indeed. Bye-bye.